G'day folks, Jim here from FX Charts, Wednesday the 9th of April, thanks for tuning in. Well, the dollar's under a little bit of pressure again today. I think there's some follow through from the slight miss on the non-farm payrolls. This comes ahead of the FOMC minutes later today. There shouldn't be any real surprises there, and probably nothing more to add to what Janet Yellen said in her press conference after the last meeting. But the dollar is a bit under pressure. I think partly the ECB and also the BOJ yesterday have both stated that there's no real need to add further easing to the market at the moment. So that's seen the euro climb, and also particularly the yen yesterday. The dollar yen fell quite heavily really, and it looks as though it could have some more downside. Cable shot higher too. There was some better than expected industrial production numbers. And also the Aussie and the commodity block are very well bid. So the US dollar's feeling the pain really. So anyway, we're going to have a look at the charts. And this is a 1 hour Euro chart to start off with. As we can see, it got up to 138.10. Now there's some reasonable resistance up there, but and that comes just ahead of this 138.20 area, which might prove a little bit difficult today. The hourly indicators are actually pointing a little bit lower, so I wouldn't be surprised to see the euros will just drift off a little bit, but I don't think we're going anywhere too far ahead of the FOMC minutes, and it might be a case of range trading between 137.5 and 138.10, 20, something like that on the top side. But as I say, the hourly charts are pointing a little bit lower at the moment. The 4 hourlies though, they remain positive, and if we can take out this 138.20 area, then I think we're possibly likely to head a little bit higher. The next port of call really is around 138.5, and then this spike high that we had up here at 138 3/4 just the other day, 24th of March. Beyond there, then we're getting back up to 139. I don't really think we're going there yet, and I think I'd probably be a seller into rallies. Although the dailies, which had been pointing lower, have now flattened out, so it could be that we've just got more choppy trade ahead of us. Down here we've got very good support at 137 around there, the 100-day moving average and the rising trend line, so I don't think we're going below there either. And all that really, I think some choppy trades, probably there are better things to look at. One of those things could be dollar yen. Now the dollar fell heavily from this 104.12 top. It's been down to a low down here of just above 101.50. It's trying to bounce from there. The hourlies are pretty oversold and they're trying to recover. So the first port of call is going to be at the first FIBO resistance around 102.15, and then beyond there 102.50. I suspect it's probably the dollar's probably a sell if we do get up to somewhere around this sort of level. The 4 hourlies, they're still pointing quite aggressively lower, and we've taken out this what was previously rising trend support now acts as a resistance. That comes in around 102. So the dailies are equally, they're pushing a little bit lower. We've broken well below the 100-day moving average, broken below the first FIBO, the first of the rising trend line. We're actually sitting back on this FIBO support here, the 38.2% of this whole run up. Now, if we do head lower, the first port of call will be below today's low. That'll be down around 101.20. There's a double bottom down here, and that saw decent Japanese corporate buys last time we were down here. But if we do go under there, then we're heading back towards this 100.75 level. Which was this low down here, the 4th of February. So I don't think today's going to be the day of it, but wait for the FOMC minutes, see what happens there. And of course we need to keep an eye on the Nikkei, because that had a bad day yesterday. Futures were pretty rough as well. So another heavy day for the Nikkei will see the pressure come back on dollar yen. So I think selling rallies is probably the way to go in the 102 to 102.15 area. Cable, as I said earlier, that benefited from much stronger than much stronger than expected industrial production. Came in at plus 0.9 month on month rather than 0.3 as expected. So having broken above the daily cloud top was about 166.05, and having broken above there, it hasn't really looked back. It's shot quite strongly higher. and then sat late in New York, early Australia, early Asian trade. Now the hourlies are pointing lower, so I think the upside is probably limited today. And ahead of the Bank of England meeting tomorrow, where no change is really expected, but I wouldn't be surprised to see some consolidation today. The 4-hourly charts, they are positive, and eventually I think we are possibly going to head high, particularly now as we've broken this descending trend resistance, and it could be that we want to head back up to this high up here, which is about 167.80, and then up to 168.21, which was the 14th of February high. On the downside, we're probably going to see some support at this peak here, 167.20 or so, and below there back towards 167, 160, 166.85, something around there. Doesn't look like we're going to get there today though, but we might just chop around, and I think in line with the euro, probably going nowhere too far today, as I say, ahead of the Bank of England tomorrow. Dollar Swiss, I've been a little bit wrong on that. Dollar Swiss has broken lower. Let me just blow that up. I suspected that this trend support here might hold, and it hasn't. So having broken down through the 200-hour moving average, we've come back to sit on the 50% pivot of the entire run up. Personally, I am slightly long of dollars. The hourlies are pointing a little bit higher, so we might see a bit of a squeeze back up. I'd be doubtful of going above the 200-hour moving average today. That's 88.70. The 100-hour moving average 88.8 or 88.90 or so. So on the 4-hour charts though, the momentum does point lower, and it could be that we need to get a retest down around these lows down here. That's around 88.15, and then below there we go down to about 87.80. So we've got this rising trend support down here. That's at 87.60. So as long as that holds, I still, in the medium term, like the idea of buying dollars, but it's looking a little bit forlorn at the moment, certainly. The dailies, which had been pointing higher, and have now flattened out, so they've lost all their momentum, and my stops on the downside will be pretty tight. I think if this low here goes, which is at 88.12, I've got my stop loss personally at 88.05, because I think if it gets down there, it's probably heading back towards 87.80. Now the Aussie, spot Aussie, well, that looks pretty good. It broke above the daily FIBO resistance that we've been talking about for the last few days. That was at, now the chart's a little bit messy, but that was at 93.39, the blue line here. So we've broken above that, and we're now heading towards this yellow line, which is at 93.85. I'm not sure we've got the power to get there today, and it may just be a day of sitting around doing nothing. The hourlies actually are pointing a little bit lower, and after the IMF report earlier on suggesting that the Australian economy is going to remain in the doldrums for the rest of the year, maybe the Aussie might just book some profits on longs here today ahead of tomorrow's jobs data. We've also got the Westpac consumer confidence and home loans data coming out shortly, so that might push it around a little bit. But this high here, 93.65, could well cap it today. If it does head higher, I think 93.85 will cap it. On the downside, I think dips probably to, well, we might see 93.40, and if we break that, then we're probably headed back towards 93.10. I don't think we're going under there. This rising trend support now is at 92.85, and for the medium term, I still like buying dips for the head and shoulder formation that we've been watching for quite some time now, which I think is probably heading eventually to about 95.80, 90, somewhere around there. But we've got a long way to go before we get there, and right now it looks like 93.5 is pretty happy at. I don't think we're going too much higher, but it'll be tomorrow's jobs data and the FOMC minutes, of course, in between time, which provides the direction. Finally, the Kiwi. The Kiwi's looking bid again. It's trying to regain this what was the rising trend support, broke through it, and it's trying to break back above it at the moment. If it can, then we're going back up to this high around 87. Now, if we get above there, this is just a 4-hour chart. If we get above there, we have to go right out to the weeklies, because 87, if we get above 87, as I've said before, there's not an awful lot. We have to go all the way back here to 2011, July 2011, to see the high here, which was 88 to 88.42. So there's nothing in between. So while I like the Aussie, I think probably the Kiwi looks pretty good as well. The weeklies are looking positive. In the short term, we might need some consolidation just to come off a little bit. We did get this brief bit back down low today, down to sort of 86.40. That'll provide the first support, and below there we could get down to the 200-hour moving average at 86.20. I don't think we're going much below there. And over the next couple of days, I do like the Kiwi higher, in line with the other commodity block currencies. And I think we will take out 87 and head on towards that 88.42 high, but that won't be today, I don't think. So that's about it. It's been a fairly interesting session, more so than I thought it would be, to be honest. And we could have some more action ahead later. We've got, I think, German. What have we got out today? We've got the German current account, US wholesale inventories. We've got the BOJ monthly survey, the UK trade balance, and then, of course, from Australia, the Westpac consumer confidence and the home loans data. So it could be fairly action-packed, and that all comes, of course, ahead of the FOMC minutes, which will be early Thursday morning Asian time. So I think, while I think trading the ranges is probably the best thing today, it looks as though the dollar is going to come under a little bit more pressure, the US dollar. And the currency I like most really is the Aussie, and also the Aussie crosses. They look as though they're going to perform well as well. So that's about it for today. Have a very good one, and we'll talk to you tomorrow. Cheers.